Markets have been drifting higher with little resistance, but that steady climb might not last. With key data out of China, Fed Chair Powell speaking, and U.S. jobs numbers on deck, there is plenty that could shake things up. I'm Johanna Bota, and joining me to break down the key risks, market themes, and what to watch in the week ahead is StoneX's head of global content, John Kicklighter. Welcome back, John. There is a lot on the radar for next week, so let's kick things off with general market conditions. What should we be prepared for?
So in these conditions, I think you can see you have the optimism of record highs for U.S. indices like the S&P 500 and the NASDAQ 100, and that puts us into kind of a sense of stasis. We're comfortable, we're confident, but we don't know how we should be confident. There's not really the fundamental backdrop to have that kind of optimism and enthusiasm, but nevertheless, the markets will go with it. And that is what I call a complacency, but it doesn't necessarily mean the markets have to stop their advance, especially at this time of year. We are heading into the 4th of July holiday week for the US, which has a significant impact on liquidity and volatility across the world. There's that appetite for risk on, calm. Everyone can kind of distract themselves from the screens, don't have to stare at charts and price because they're usually fairly confident the markets will continue to behave. And with record highs, it's only going to compound those views. Now, there's a lot of uncertainty, very headline-oriented markets right now, but as long as something really doesn't come out of the wings and upset these markets, they're likely going to want to keep grinding higher and really fulfill that historical norm for the 27th week being the best week of the year for a benchmark like the S&P 500.
So then what could really shake things up then? Any big themes out there that might rattle the bulls or the bears?
So thematically, we have just been knocking out each of these major issues and the markets are just bouncing right back. So it's building up a sense of resiliency. We had the Middle East conflict between Iran and Israel and the US, and that has already moderated. We've already returned to record highs from that very aggressive, abrupt development. We obviously have the Chinese US trade war, which seems to be improving, and the trade war in general, the uncertainties. And we also have the uncertainties of monetary policy, which can be a boon to markets and liquidity, yet it doesn't necessarily seem to be advancing in that direction. Nevertheless, the markets are unperturbed. I think a lot of it is jawboning. We used to see jawboning a couple of years ago from central banks, and they were really leaning into it, urging and guiding the markets without actually having to do anything with monetary policy. At this point, though, it's President Trump that's doing the jawboning. He is threatening a shadow Federal Reserve chairman, like already getting the next one lined up and vowing that they're going to be a big dove, already saying that there's a U.S.-China trade deal, even though there's no details offered. It's a lot of jawboning, and I think that gives that sense of resiliency. And even if something disrupts us and we get risk aversion because of a headline or a data point, we still have that sense of, well, if they're saying that things are going to improve and we are riding through these major themes, then perhaps we can just keep with our complacent bid.
Well, it's a little bit of a fake it till you make it, right? And looking ahead, what's the top event risk next week that could spark these themes or set a new tone for the market then?
So there is pretty heavy event risk throughout the week. However, you have to remember we are going into a holiday week. So the 4th of July actually falls on a Friday this week. So it's an extended holiday weekend. That will definitely lead to a significant drop off, even the lead up to that event. So remember that because Thursday's event risk is pretty heavy. But we can start off on Monday with Chinese PMIs. These are the government numbers. You want a proxy of Chinese economic activity. It's the second largest economy in the world. Obviously, a lot of the major themes nowadays are centered in, or at least include, China's economic activity. That's a good update. It's always taken with a grain of salt because it comes from the government, but it's still our place setter. We need to absorb it and see where it takes us. Tuesday, I would be focusing on some of these business and manufacturing activity figures. So we have early Tokyo. You have the Japanese Tonkin large business sentiment indicator and the capital expenditures figure for second quarter. Very noteworthy, especially given all the circumstances around the economy's growth and monetary policy. You have the German jobless figures, you have Mexican business confidence. We will have Jerome Powell speaking again, although this time not in testimony to Congress. You have the ISM's manufacturing report for the United States. We want to see how it is doing after the tariffs are continuing to come off, or at least the abrupt immediate pressures from it. And then I'd also watch some of the jobs figures. You have the U.S. JOLTS quits and openings. So that's a important precursor and just general trend that you want to watch. Wednesday is very light. It's a lull, which is why I think the second half of the week is really going to drop off for scheduled event risk. And there's really nothing that's going to solidify liquidity in it to offset those expectations of the seasonal drain of volume and volatility. But we have Canadian manufacturing, which again, in the context of how are the world's major powers doing, especially in the North America between the US, Canada, and Mexico, how their trade is doing post reciprocal tariffs walk back. You want to keep tabs on that. And then Thursday is when we get the top event risk. And we're going to have Aussie trade, UK inflation expectations. You're going to have the Canadian trade bounce, the US trade bounce, US ISM service sector activity report. But it's non-farm payrolls that most people are going to be watching, because we're looking at the battle between Powell and his status quo on monetary policy and Trump's pressure to do something. And obviously non-farm payrolls, the employment level is one of the dual mandate components. So we want to see how that comes across wires. It's very media friendly. Everyone's going to be talking about it. It's going to dominate the headlines. But again, against the backdrop of very thin liquidity, I don't think that it can generate a whole lot of momentum. Certainly not momentum, but probably not even volatility. And then Friday, there are things to watch. A lot of the markets are going to be really settled and really adverse to significant movement, but take in things like the Japanese and Hong Kong FX reserves, because it's talking about some of the longer term considerations of like the anti-dollar view that you want to see, and just observe what happens with markets as we see the polar flip with all the liquidity drain.
Yeah, so plenty to watch for in the week ahead then. Thank you, John, and thank you for your time. Thank you for watching. For more financial content, don't forget to like and subscribe to our channel.